Michael McGrath.
Thank you very much, Las Céann Comhairle, and at the outset I too would like to express my own personal condolences to Deputy Doherty, to you, Las Céann Comhairle, the other Oireachtas members from Donegal, your constituents, and above all else, of course, the families of the 4 young men who tragically died in the road accident over the weekend. Absolutely devastating event, and it puts everything else into perspective. I just want to welcome the opportunity of making some remarks on this bill. I'm sharing my time with Deputy McGuinness. We'll share it 10 minutes each, Las Céann Comhairle. And I think it's fair to say, Minister, that in your response on behalf of Government, Minister of State Kenny, you certainly didn't hold back in the predictions that you have made and the Department has made about the implications of the bill. Increasing interest rates, you're saying, increasing the number of repossessions, significant economic and financial costs for the Irish economy and society as a whole. But I think it's important that Government understands, certainly at least from our perspective within Fianna Fáil, as to why there is such frustration among consumers and mortgage holders at the current system, at the difficulties they face on a day-to-day basis in dealing with so-called vulture funds. Deputy McGuinness is the chairperson of the Oireachtas Finance Committee. Deputy Doherty is a member as well. We have tried on so many occasions, Minister, to get the so-called vulture funds in before us, to engage with us, to answer questions, to debate their business model, the way in which they deal with individual mortgage accounts, the type of solutions that they offer, and how they are making their decisions. And on each and every occasion, they have refused to engage. They have refused to come before a committee of this House. In fact, this House passed a motion on that very issue some time ago. And that in itself leads to a lot of suspicion and a lot of worry. Because say what you may about the banks, and we certainly don't hold back at that committee or in general in this House in criticising them where it is warranted, but they come before the Oireachtas Finance Committee, they complete a very detailed questionnaire and they answer questions. We're not always satisfied with the answers we get, but we do get engagement, and there's no hiding place for them. And you contrast that with the other loan owners, these funds who purchase loans from financial institutions. No accountability, no engagement, and up until recently, those funds themselves had no direct oversight by the central bank. And I welcome the fact that the Government did support our private members' legislation, which in essence regulates those funds for the very first time. And I acknowledge the work of your department and your own support in bringing that about and in ensuring that that was just in recent days signed into law. It has long been our position, Minister, as a party, that the banks should be working through their loan books themselves. They should be making decisions on a case-by-case basis. They should know their customers. They certainly should have an intimate knowledge of the history of each individual mortgage account, and they really are best placed to do everything that possibly can be done to rescue that mortgage and to ensure that the family home is saved. And I acknowledge that there are mixed messages from the Single Supervisory Authority. When we met them in Frankfurt some months ago, they were at pains to say they've set no targets. There's no pressure on the institutions to reduce their non-performing loan levels. I know that's not the case. They may not have told the banks how to do it, but they certainly have told them that they must do it, and they must reduce their NPL levels to European norms of the order of 4 to 5% of their book. So they are speaking out of both sides of their mouth, as far as I'm concerned. When it is said, as it often is, that vulture funds are more likely to do deals with borrowers than banks, that may well be the case if you are willing to sacrifice your home. But I certainly, as somebody who advocates for borrowers, deals with individual cases quite a lot, I've not come across an instance where somebody has been able to stay in their home and negotiated a very good deal with these vulture funds. I personally have not seen that. In relation to this legislation, we will support it at second stage. We believe it does warrant very careful examination at the pre-legislative scrutiny phase. I note Minister of State Kenny has said it does require a money message, so I take it that the bill is not going to be in any way supported by government. In fact, government will not allow it proceed to committee stage, but perhaps the full pre-legislative scrutiny can still be conducted, and I think it should be done. I think, Minister, an opportunity was missed when it came to the review of the Code of Conduct on mortgage arrears, and this is an issue that I raised directly with you. Under Section 39 of the Code, any lender is only required to consider the forbearance options, the alternative arrangement, the alternative repayment arrangements that they offer. They're only required to consider those ones. They're not required to consider the full suite of options that are there under the mortgage arrears resolution process. There's a gap there, there's a deficit there, and it means that in effect these funds can just say to borrowers, we don't do split mortgages, we don't do arrears capitalisations, and they're not in breach of any code, notwithstanding the regulation that has now been extended to them. So that is a change that should have been made, and I still think that you should still make that change. And in addition, when we brought forward legislation to provide powers to the central bank to restrict interest rates, that too was knocked back by the department, by the central bank. But the reality is that if one of these funds decided tomorrow morning that the interest rate on a loan is to double from 4% to 8%, there would be a hue and cry. It would be a scandal, but there is nothing that anybody in this House could do, in the central bank could do, or within your department could do to deal with that, because you refuse to put on the statute books any even limited powers to deal with the egregious interest rates which are currently being charged, in my view, in some cases, but which potentially could be charged in a scenario where interest rates are increased. The fundamental problem, as I see it, with these funds is their business model is a very different one to the banks. The banks hope to be here in 20, 30, 40 years' time. They hope to build customer loyalty, brand loyalty. If they give out a mortgage, there's a reasonable expectation that that bank will still be the institution accepting the final payment on that mortgage in 20 or 30 years' time. There's no such expectation with any of these funds. They're not going to be here in 10, 15 or 20 years' time. They simply have a different business model. So we're not just looking at one portfolio sale to one of these funds. We will see these sales go on again and again. And the reality is that loans, over the course of the life of a loan, may well end up changing hands on multiple occasions. And that's not in anybody's interest, Minister, and it's not the road, in my view, that we should be going down. There is obviously an issue in relation to the application of this code in respect of mortgages that have already been written, because the reality is that borrowers have signed a mortgage contract which explicitly allows the lender to sell on that mortgage in effect. So perhaps it's a legal question, and it's certainly one I would value the input of independent advice from the Parliamentary Legal Counsel or others as to whether or not this bill, if it were to be enacted, would have any impact on all of the mortgage contracts that have already been entered into. Can the Oireachtas set aside that contractual provision with which both parties already signed up to? I have my doubts, but that's a matter for legal opinion to provide. In relation to the consequences of the bill for the financial system, for banks and so on, obviously very significant issues have been raised. From my perspective, securitisation is a legitimate and bona fide type of financial transaction, particularly in this context where it's in the form of passive securitisation, where all of the day-to-day management of the loans and indeed the decisions around the loans are made by the existing lender who continues to hold legal title. That is important. That is a bona fide transaction from my perspective. You have said, or Minister of State Kenny has said on behalf of government, that the bill, if enacted, would increase interest rates. I mean, Irish consumers and mortgage holders are already paying way above and beyond what they should be paying in relation to loans. And that is an issue, Minister, that we need to examine further and we need to make progress on. It has also said that this would stop in its tracks further NPL loan sales. There's no doubt the banks are under immense pressure from Europe. It remains our view that the banks should be working through their loan books, they should be dealing with them. I would have a concern that if this bill is entering into a pipeline that takes many months to come through, it could actually accelerate NPL sales. Because if you're sitting behind a desk in a bank, you're looking at a high level of NPL, you may well try and get a sale off before any such legislation comes into place. That's an issue that would need to be teased out as well. So I'll hand over to Deputy McGuinness. It is our view, Minister, there is a real issue here. Much of it derives from the lack of engagement, the lack of accountability on behalf of these so-called vulture funds. They're not easy to deal with. I can tell you that personally. And I think people have a reasonable expectation that their bank will continue to work with them, will continue to administer their mortgage. Thank you very much, Les.
Dr McGuinness.